I'm Paul Taylor, the Chief Economist for the National Automobile Dealers Association. We're located in McLean, Virginia, right outside of Washington.
Right, especially in places like California, where we have huge subprime problems and we're having a rise in unemployment. And now we're seeing oil go over $100 a barrel. Do you see an end in sight for all of this?
The oil difficulty, yes, but uncertainty in the world makes it difficult to decide when that's going to happen. A lot of people who are more knowledgeable about the oil industry than I am tell me that $65 to $75 per barrel is a more reasonable range for oil given supply conditions worldwide and demand conditions worldwide. We're seeing demand slow down in the United States and in North America generally. We're seeing demand slow down in Europe. We're seeing even some signs that it may be slowing down somewhat in China and in India, and that the speculation in oil from the East is also slowing down. So all of that tends to bring supply into a reasonable relationship with demand. That should bring prices down. And we could see gasoline, if stocks build up, gasoline prices come as low as $2.50 per gallon or $2.40 per gallon if the refined product stocks build up. Of course, in our country, where we don't build new refineries and haven't for several decades, it's always a question of whether there'll be a refinery difficulty that stops production because we're constrained in that area. So if everything goes right, we could see gasoline prices fall, but we could also see a world event that's kept them at the current very high levels, above $90.
If we see gas prices fall, what kind of difference would that make in the sales of vehicles?
It changes the mix generally, and the overall economy and the employment level changes the total sales. We have total sales going down by 2.5% this year on the new side. We also think that we'll see some diminished sales of used cars because of a slower economy, and so that's where we see the market going. Gasoline prices are a drain on household budgets. So are heating costs in the colder areas of the country, and generally the cost of electricity is being pushed up by the cost of fuel because we're using natural gas and oil to produce most of our fuel, and even coal prices are up somewhat over the long term.
Do you see alternative energies such as ethanol making a difference?
It already has, and it came along at a time when we really needed it. Ethanol was blended to a 10% rate with gasoline, and that extended our gasoline supplies when the refined product was in short supply. That's what controls the price of gasoline. We also have a cycle in gasoline production that waits for the season in heating oil to be relatively mature before they start producing gasoline for the spring. So if we could get some warm weather as we move through the next couple of months into March and April, that would help produce more gasoline earlier in the season, increase the stocks, and reduce the price. We also see catalytic cracking used to turn excess heating oil into gasoline. So if there was some warm weather that uncharacteristically came over the next several months in the Northeast and the Midwest, that would help increase the stocks of gasoline.
Paul Taylor, thank you very much.
Good to be with you.